The Eye of the Tiger, the title song of the motion picture in Rocky III, was a paean to surviving, going the distance, and winning. Our focus today, however, is on the eyes of a global investor who wins by scouring burly neighborhoods in search of hidden gems. Hello everyone and welcome to a brand new season of Wizards. I'm your friendly host, Ramesh Damani. A linguist, a CFA, a globetrotter, a value seeker, it gives me great pleasure to welcome the CEO and co-CIO of Rondure Global Investors, Laura Geritz. Laura, welcome to our show.
Thank you, Mr. Damani. Thank you so much for having me.
Thank you for joining us at 6 a.m. in Salt Lake. Thank you so much for being so sporty. Laura, in a recent interview, said that capital grows better, it compounds better in friendlier climates. Where in emerging markets do you find friendliness now as a global investor?
Well, you know, it's generally speaking places that are partnered with countries that are, where the supply chains are shifting. So could be Mexico, Brazil, India, Southeast Asia. I think one place you find investments is also places that have faced inflation head on. So lots of places actually.
So Laura, if I gave you a $100 million check in your fund and I told you choose between China and India, only one country, which would it be?
Well, I'm a long-term investor, so I'd have to say India. We always say, you want to be careful of countries where the capital can belong to the government and not to the shareholder. And so we're cautious of China over the long term. The market's gotten very cheap though, so over the short run, China might be a good opportunity.
You made a lot of fans in India by picking India, but you have said that China inflation rate is going down, interest rates are stable in China, and valuations are clearly at a knockdown level. So on a purely fundamental basis, how does India stack over China then?
I like the long run potential of India so much better. I mean, if you look at it, just from our process perspective, when you screen bottom up and look at companies, India is just full of such fantastic companies. And, I think if you look at the potential for compounding your capital because of regulation changes, because of just supply chain changes, India offers great potential. What is attractive about China, which we wait for these chances a lot in our investing careers, is that some very high quality companies have gotten inexpensive because China is just, the view of China is just so negative right now.
Let me ask you another way. When the Berlin Wall fell, the world globalized, and China was a great beneficiary because it entered the WTO. Now with the world deglobalizing, how does the prospects of India stack up? And what are the themes? How do you play deglobalization if you believe that is going to be a force?
Yeah, it's really simply categorized into a few buckets: reshoring, multi-shoring, onshoring, and friendshoring. And you play it through, India, you play it through Mexico, you play it through Latin America, Southeast Asia, Vietnam. So it's a very different set of countries than I think what a lot of investors have been used to over the last 10 or 12 years.
Let me pick your brains on that. You said reshoring, friendshoring, close shoring. So it's basically what we call in India an India plus one, China plus one strategy.
We call it NAFTA. As Americans, we call it NAFTA plus Southeast Asia plus India. And Latin America. So it's a very similar way of looking at the world.
NAFTA has become a bad word in America itself.
Yeah, but it's better than, I guess it's better than some of the alternatives over the last few years.
But Laura, is there really an alternative to globalization? I mean, the pendulum might swing a little bit towards deglobalization, but businesses will go where costs are lowest, won't they?
Yes, they will. So I mean, that just opens up different opportunities, I would say, than what we've seen over the last 10 to 12 years. But I agree with you. I mean, American businesses are still going to choose places where manufacturing is inexpensive. So I just think it's a movement of the supply chain. There's some reshoring, but a lot of it is, multi-shoring and near-shoring. So lessening your risk on one country.
Which of course plays to India's strengths because it is a large country with a lot of talented people. You can get 5,000 software engineers, 5,000 chemical engineers in one go.
Yes, it's an amazing economy and country.
Laura, the world is your oyster. I mean, you can pick stocks anywhere you want in the world. But how do you begin the process of narrowing down the stocks? How do you decide this is my investable list?
It's an iterative process for us. I mean, we start with screens. We have our own proprietary screen. We literally, there are 70,000 plus companies in the world. We can literally plug a company into this screen. We can do 1,000 at once. Go through each country or company. It's a 15-year snapshot of the income statement, balance sheet, and cash flow statement of the company. And you can narrow down the world, into a set of 300 to 500 companies pretty easily through the screening process. And then you take the next steps in your analysis, which is discovering whether the business has a moat. For us, I mean, our team has 20 plus years of experience, collaboratively, each of us. And so we've seen these companies many times between the team. So just an iterative process, but I mean, quality is quality, and it tends to have long duration. It doesn't tend to change. What changes is the macro environment around it, the company.
So if I hear you right, you're more or less country agnostic. You're focusing more on bottom-up stock picking?
Yes. So we do think about, what is the right price to pay for a company in a country, and how good will that country be for the compounding of capital in the future?
It has to be friendly in compounding terms, as you said.
Maybe over maybe over the last few years in particular, getting the field right has been increasingly important.
It has. But you have a proprietary formula that you talk about called CGP. Can you explain what they stand for and give it some color? Tell me how you find companies in India using that.
It's very simple. So we start with the numbers, and then we look and we look and say this, okay, this is what happened with the business in the past, but we really want to know what's going to happen with the business in the future. So what we do is it's called Club Glue platform. It's very simple. It's a 9-point scoring system. And what you're doing is you're looking at a business on 3 different facets. So you're looking to see, is this business a club? And what we mean by that is, does it dominate something? Is it a low cost leader of a product? Really simple businesses like, the delivery company Blue Dart, that it dominates last mile. It's a club,
It's a club company.
It's a club. And then you look at glue, how sticky is this product? I mean, Nestle India Asian Paints, those are products that people need, they buy frequently. Whenever I go to India, I think, oh, geez, you just have to look around you and see that the potential for paint is extraordinary. And then the last facet of that is called platform. And again, this is not just an e-commerce network. This is also distribution network. And I think Asian Paints is another example of a company with a phenomenal distribution network. Anybody can do this process. It's very simple.
And the golden mean for you is to find companies in the crux of the CGP formula, as you call it, right?
You want at least 2. So you want to have a club, and you want it to be a club and a platform, or a club and a glue. If you only get one attribute, chances are you're going to get the stock wrong. In this whole process, I learned that, my biggest mistake was paying too high a price for companies where the product wasn't sticky enough. So this process helps you get better at your own mistakes too, and become a better investor.
But Laura, as you go through your CGP formula, particularly say in a market like India, which I'm familiar with, a lot of the great companies you talked about also are not cheap. Nestle is not cheap, Asian Paints is not cheap, probably will never get cheap. So how do you construct price? I mean, how do you determine what price is appropriate?
we're patient. You know, the one beautiful thing about the Indian market is it's broad. It's a broad, deep market. And so there's always opportunities in the market. It might not be Asian Paints today or Nestle India. It may be something else. But, you know, you wait patiently. You have your list of companies you want to buy, and you just wait for some sort of opportunity, you know, or something that gives you that opportunity to buy them. India is one of the rare markets, emerging markets allow you to do this, where you can build what we call umbrella valuations. So we look at, for instance, we look at a business in the US and we say, oh, this is how big it got in the US over time. And we can apply that to, well, I mean, the penetration rates in India are so low, you can apply it to almost any business in India with a good management team and just kind of let it do its compounding over time. If we look at PEs, they look high today, but if we look at market cap versus the potential size of the economy, the companies still have a lot of potential to just grow and compound through the years.
That's a great way. Don't look at the near-term earnings or the price-earnings ratio, but look at the market cap to the size of the opportunity.
Very tiny. I mean, look at Blue Dart. We mentioned it earlier. Look at it versus its, you know, it has a company. You know, you look at you know, the delivery companies.
FedEx or UPS.
Yeah, exactly. It's a tiny company today in India. Huge potential.
Laura, please hang around a little bit more. We'll take a quick commercial break and see you on the other side. And a very warm welcome back to the Wizards of the Street. We are in conversation with Laura Geritz, CEO and co-CIO, Rondure Global Investors. Laura, can you give me an example of, historically, which stock are you very proud that you picked in India and you got it right? What attracted you to that stock?
Well, I found that if I stick to my knitting of buying good companies when they go out of favor, you do very well. Of course, I'm at a new firm today, but I was invested in India decades ago. So we bought, you know, Asian Paints when it was a small cap company. So I look back at that, and, you know, when I started my new firm, I bought it again, and, you know, pretty much reassembled the same portfolio I had, and I've just held on. So, you know, I would point to that as one of my best buys, though. You know, buying that as a small cap company and just holding on.
It's been a great stock. It's still a compounder. But, you know, I have to ask you this because I know you're from Kansas, and in The Wizard of Oz, there's a very famous dialogue that says, Toto, I have a feeling we're not in Kansas anymore. When you go to emerging markets, do you get the same sense of feeling? And why do you persist with emerging markets when you're one jet, 30 minutes away from Silicon Valley?
Well, you know, it's because I grew up in Kansas, you know, that I always, you know, when you're in Kansas, you pick up a book, you imagine places all over the world. My parents, you know, passed their passion for the world and their imagination and creativity on to me. So I think it was because I was in Kansas, and I was literally in tornado country in Kansas, that, you know, I wanted to see the world. And
you started in Japan?
I've been to Europe before, but I had started, yes, by teaching English in Japan, studying the Japanese language.
That was quite an interesting experience for a fund manager. How did that experience shape you? I mean, did it help you? Did it give you some better insights that you normally would not have had, you thought?
I think, you know, I'm sensitive to cultures. I mean, the nuances of language are really important. I don't know if you know in Japan, but, you know, probably, I will try means no, probably means no, maybe means no, yes can mean no, and no definitely means no. So, I mean, there's the nuances of language and culture matter in investing.
And that's the nuances that you use. But something that's not nuanced right now is, you know, the Fed has been raising rates. It has been raising rates since March. How long does it, generally whenever the Fed raises rates, there's a disaster waiting to happen. Mexico, Brady bonds, Caribbean. We've seen some early signs of that in surprising places. How long does it take to work its way through the economy, these rising rates? And how scared are you of that?
12 to 18 months, generally how long it takes to work through the economy. I mean, just This has been a different cycle because it's because of COVID, lockdowns and reopening and monetary and fiscal stimulus. I feel like you have different cycles all over the world. And you've had, the cycle has been more like a tsunami than a wave this time. So I think people still don't understand that demand actually needs to be destroyed to bring inflation down in the United States. So it's going to be a tough year for earnings in the world's biggest economy next year, I think.
So what is your current mantra? You say buy the dips, or you say sell the risk on rally?
We're until the mentality of buy the dip dies, we are still selling the rally. We're still saying, with a portfolio that's more heavily tilted to consumer staples and less cyclical businesses. But I mean, because of COVID, it's really, it's really a great time frame to actually be looking at companies as opposed to just one cycle globally. It's many cycles going on all over the world.
Laura, what is the cycle in India that you're looking at now? You look out 2-3 years down the road. What is it about this market that excites you, or which sectors excite you? Can you give us some color on that?
It was the only country in the world where there were expensive stocks where we didn't sell or take profit. And the reason is because I really believe this time around, that the tides are shifting. You're getting movement of more business to India. You have the country investing in infrastructure and development. And so I'm really optimistic about the long-term prospects for India. So it was one of the few places where I said, if you look at surface level PEs or multiples in the country, I'm willing to hang on because I think the prospects are so good 3, 5, and 10 years from now.
So basically you sat through the pandemic fall and rode the rise again?
Bought more too. So
that's pretty gutsy.
Well, I mean, just you have phenomenally good companies. I don't know if you remember, but when everyone was in a panic, I think it was during the second lockdown, we actually held tight and said, maybe this will be finally an opportunity to increase our stakes. So we like to do what others aren't doing.
It's easier said, it's tougher to do. I know that from practical experience. You've also said that bull markets only teach bad lessons. What do you mean by that?
Well, I stole that from another great investor, Howard Marks. We've been in a narrative environment for the last few years where people haven't been looking at the actual fundamentals of the companies. They've just been buying stories. I think it's one of the this last few years, I think, has been one of the biggest bubbles in markets I've seen in my history anyway. So it doesn't teach you to roll up your sleeves and actually look at how good the businesses are. And I think people are being forced to do that now. So it teaches you that making money is easy when it's not.
Are you still afraid that the Fed will keep raising rates, or will they blink at some point?
I think they can. Last week's speech by Jerome Powell was his best. I mean, he finally took inflation seriously and let the markets know that he took inflation seriously. I mean, the economy here again, you have certain sectors of the economy here cooling, like the tech sector, which in my book was so overheated. I mean, it had 12 years of free money, so it was just incredibly overheated. That's not necessarily fully recessionary. What is hot here is the services economy. It is hot, and that has to give. We're seeing incredible food price inflation here. So he's got to take this seriously. He's got to break it, or it's going to be worse in the long run.
Yeah, it's like what Paul Volcker did, perhaps. Take the medicine, set the economy right. But that's too serious. What we do, Laura, in the show is we do a rapid fire round to try and get a snapshot of my guest. And I think you'll be a perfect candidate for that because there's so much varied interest. So I'm going to ask you questions. First thing that comes to your mind, shoot out, right? John Templeton or Jim Rogers, better for emerging markets?
Templeton style Rogers books. Rogers books are phenomenal.
An emerging market leader that gets it?
I think, I'll go country. Vietnam. The North Asian model for development is phenomenal.
Is it following the East Asian model of the 60s
It
and
is
70s?
following the East Asian model, low cost manufacturing, high priority based on education, and then go up the value chain.
Lovely. Would you rather buy semiconductor stocks or oil stocks for a period of 3 years?
Oh, this is a tough one. I mean, I think semiconductors, but I don't think we're done yet with the earnings coming down.
Okay. A Republican or Democratic, who would make a better president for the markets in 2024?
Normal Republican, normally, but with inflation, I don't know if tax cuts are going to be what the market wants to hear.
Okay.
What
The
happened
best
in
country
UK?
you visit, yeah. So you visited 75 countries. Which is the best country to visit as a tourist? As a tourist,
This one's hard. I'll go South Africa.
South Africa.
Lovely country.
Yeah, lovely safaris, lovely landscape, great. An investment book that is your Bible.
Intelligent Investor.
Benjamin Graham.
Ben Graham, Defensive Investor chapter is still, it covers quality, it covers value. It's a phenomenal book.
Lovely. And an Indian investor that you're familiar with. Can you name anyone that you're familiar with?
Munish Fabrai.
Yeah, he's out in Irvine County, I think. He's also very bullish on India at this time.
He's more deep value than me, but I appreciate his style.
Moving on, an Indian CEO whom you met and admired.
It's more a team, a management team, and it's Mariko. And I've never seen a CFO so passionate about his product.
Harsh Mariwala and his team, right?
Yes,
Lovely.
exactly. Amazing.
A basketball game with the Utah Jazz, which is your local team, or an IPL game, what would you rather watch?
Still, cricket, but the games are long and it's really hot.
The 5-day version is long. The IPL is 3 hours. It's like a basketball game.
It's still long. It's still long, but I would rather see cricket.
Yes, okay. The final question, because I know you're a Japanophile. Would you rather go see sakuras or cherry blossoms, climb Mount Fuji, or soak in an onsen, which is a Japanese spa? What would you do if you had a weekend free in Japan?
I've done all three of those things. They're all phenomenal, but I would ride a train in the middle of nowhere. There are some of these trains that no one gets on, and they're just wonderful. So South Island, through snow country. It's a lovely weekend now.
Just out of curiosity, they also have 7-star luxury trains. Have you done them in Japan? I've always thought that'd be good.
As probably know, the line for those was, the favor went to the locals. The favors went to the locals first. So the line to get on one of those was extremely long. It was
and expensive, I'm sure.
Yes.
Laura,
but there are very cheap ones through the center of Kyushu that are just phenomenal.
Yeah. I love the name of your firm, Rondure Advisors. How did you get that name?
It was from a Walt Whitman poem. It's called Passage to India. Oh, vast Rondure swimming in space. It's about the world, and the globe.
And Rondure means really spherical or globe, right?
Yes.
Yeah.
So,
I did my homework on you. I know you liked Walt Whitman. And one of his other quotes is, "We convince by our presence." And certainly you've convinced us by your presence on our show today. Thank you so much, Laura, for being part of our show on Wizards.
Thank you so much for your time. Have a nice evening. Thank you.
Thank you so much. We'll see you next week on another episode of the Wizards of the Street. I'm Ramesh Damani, wishing you a very happy week ahead. Goodbye.